Hi everyone. I was going to show you the balance sheet that corresponds to this homework problem, my number 9, which yours will have different numbers. I went ahead and filled it in. I didn't want to consume video time showing you, the filling as I fill stuff in. More than anything else, I wanted to show you the structure where you have cash, accounts receivable, prepaid rent, supplies. Notice on the asset side, as the assets go down the list, they become less and less. They become less and less liquid. By liquid, we mean that it gets harder and harder to convert them into cash. Obviously, the easiest thing to convert into cash is cash. Accounts receivable pretty rapidly gets turned into cash. Prepaid rent, supplies as you go down, and then equipment, of course, is the hardest to convert into cash. Pretty much this comes straight off the trial balance. If you will notice here, pretty much everything was just pulled straight off the trial balance. Be mindful that equipment and accumulated depreciation for that corresponding equipment, that contra asset, contra in Latin and Spanish means against, and this account is against this. You can't really take it at the cost of 37,100. You have to lower it by 5,600, which is the accumulated depreciation account. And that's what gives you the net book value on the books, or the asset value on the books. This has nothing to do with how much someone would pay you for the equipment. This is how much you on your books is showing, the net book value. Okay, so you got cash, accounts receivables, prepaid rent. It gives you total asset. Let's swing over here to this side now. It's running slow because I have a scan that's running right now. The side, again, what you tend to owe the fastest, and then as you go down, you owe it the slowest. Income tax payable is different. Remember in the income statement, it was on a line all by itself after income tax before, or net income before tax. Here again, you notice it's the very last thing all by itself. We got accounts payable of 8,900, 700 for service revenue, 400 for interest payable. The note payable, which is the long-term debt, is here. Note payable, let's see if I can slide over a little bit. Note payable, and then income tax payable last, which is the 2,800. Pretty straightforward. I mean, basically, just line up your liabilities and take them off here and put them here. The tricky thing is knowing that unearned service revenue. In other words, unearned means you've taken the money and you have it in your pocket and you have not performed the service yet. That's a liability. You owe it to this party you took the cash from. And stockholders' equity pretty much is pretty easy. Common stock comes right off of the trial balance. Where it gets tricky, and this is where students will get into some trouble, is they've been pulling all these accounts, whether they're liabilities or expenses, they've been just pulling them off the trial balance. They have a tendency to, when they see retained earnings, right here, this is retained earnings as of December 31st, 2014. Remember we discussed previously that this 2,900 is not December 31st, 2014. It's the December 31st, 2013. And the way you can tell that is because on the trial balance, it has a balance of a credit of 2,900, and the revenue and the expenses have not been closed out to it yet. If they had been closed out to it, then these would have zeros. They would have been closed out, net income calculated, and the difference, net income or net loss, put into retained earnings. So it gets a little tricky because retained earnings here is not what's sitting on the books. It's this adjusted for the revenue and all the expenses, which, if you'll carefully note, you've already done up here in the statement of retained earnings. So you just take the 20,300, put it right there. That gives you total stockholders' equity. When you sum total stockholders' equity and total liabilities, then you get total liabilities and stockholders' equity. You can tell you've done it right because your assets and your liabilities and stockholders' equity equal each other the way they should if you are working with, if you have a balanced set of books. The thing to be cautious with on this, on this balance sheet, that's again easy. It's easy to get this confused in terms of accumulated depreciation and remembering to subtract that out so that you can have the net book value. Unearned service revenue. If you don't know, if you don't know what that this is a liability, you'll get in trouble. If you don't know that a prepaid expense, an expense where you've sent cash somewhere, and you have not received that service yet, that's an asset, you can get into trouble. Notice these are kind of mirror images of each other. This is money you've collected and haven't earned. This is money you've paid and don't really owe yet. So these are kind of sister accounts of each other. But this is how you put it together. Retained earnings will get people in trouble because they'll come over to the adjusted trial balance and they'll try to pull retained earnings, but this is retained earnings not as of here, as of this date. It's retained earnings as of the beginning of the period, which you can tell because the books still have service revenue in them and they still have expenses in them. I hope you found this useful. This is the balance sheet.